Hey, Dirk here, and in this video I want to share with you an example breakdown from my technical analysis and trading course inside my Intelligent Cryptocurrency VIP membership, where I break you down step by step the thought process behind a profitable trade, in advance how to identify the thought process that went into it, the risk management, the stop loss, the targets, and all of that in a step-by-step way. And hopefully this is going to allow you to understand how you can approach trading from a much more, let's just say, professional and mathematically statistical way of finding these 1 to 3 risk reward setups, meaning if you're wrong, you lose 1 unit. If you are right, you make at least 3 units or more, a unit being 1% of the trading bankroll. And I'm going to share with you how I personally use this strategy to use leverage trading, so futures trading with leverage on low time frame charts, so 5-minute and 1-minute charts. Ultimately, the amount of leverage doesn't matter how you use it. What matters is the position sizing, the risk management, and the invalidation. All of that I'm going to break down for you in this lesson in a step-by-step way. And like I said, I really do hope that this gives you a completely different perspective on how you can go about trading, scalping, day trading, even using leverage, but doing it in a way that allows you to be more consistently profitable without feeling like you're guessing or gambling all of the time, which happens a lot in the trading space. So before I play that for you, also, if you want to learn more from me, this is just one example. There's over 30 different lessons in the trading and technical analysis course. You can get full access to the course. The first link in the description down below. You can sign up, you can get full access to that training. And on top of that, there's a lot more included in the Intelligent Cryptocurrency VIP membership. So if you do want to continue learning and you find this valuable, hopefully I'll see you inside Intelligent Cryptocurrency. Without further ado, let's play the lesson. Enjoy. In this video, I want to break down another profitable trade setup for you with a 1 to 3 risk reward and the thinking behind it, how it works. So basically, this was the initial setup. You can see we're on a 5-minute chart over here, which if you've gone through the training by now, you know I like to personally just look at lower time frames for entries when trading with leverage, especially trading higher with leverage. Of course, you can completely decide your own trading style. That is not what this specific video is about. This is about how I'm using low time frames with higher leverage. In this case, I was actually using 50x leverage to determine this trade. And you can see the movement in terms of price overall isn't a huge amount. You can see I have a $100 stop from this entry, and the upside is literally about $300, just over $300. So it is just over a 1 to 3 risk reward. And the reason why I can use higher leverage is because my stops are tight, which means if I'm wrong, there's invalidation. And in this video, I'm going to walk you through the thought process of this specific trade setup, why I took it, why I was looking for those specific invalidations and targets. And hopefully you will be able to learn from this. So let's dive into the actual chart, and you can see this is the 1-hour chart, the bigger picture over here, and we can start with that. And you can see over here, the zoomed in section is actually the trade where I'd zoom in on a 5-minute chart or even a 1-minute chart to be able to get that trade set up. So what do we see over here? On this big move up, we see over here is a fair value gap or an imbalance. So if you've gone through the training on supply and demand of fair value gaps, you would know that potentially that is a target for when the price retraces to be able to fill that gap and then reverse or at least bounce off it. And that is exactly what happens. So I will walk you through the replay just now in a step-by-step, but I want to walk you through this first where we have everything visible. So we have the fair value gap, which we can identify at this point already. We pulled back here. You can see it touched the top of the fair value gap, but it didn't really fill deep into it. It continued on a big move to the upside, and then it started to retrace back down. And on the move back down, you can also see, of course, here's a fair value gap too. That one got filled. We got more downside action over here, and we would have set our alert again around this area to get alerted if we do get back into that fair value gap zone, which we eventually did. Obviously, it took time. You can see this was on the 4th of July, and it took all the way to the 12th. So it took about a week, just over a week, 8 days, to get back into the fair value gap zone. But once we got it, of course, our alert got set, and then we can zoom in on the lower time frames, the 15-minute, the 5-minute, and the 1-minute, to be able to see if we can get a possible entry. We already know, based off the strategy, that fair value gaps have a high potential if we do bottom in there in a low time frame setup, that we can expect a bounce. So we're already aware of the potential. We've set our alert, and you can see here, going into that fair value gap zone, we are building a bullish RSI divergence. While the price is going lower, the price of the RSI is going higher. So that is another sign of confirmation already, or potential confluence, that we could be looking at a good setup here, where we are looking at a bullish RSI divergence going into the fair value gap. Then what we do is we zoom in to a lower time frame. So let's just do that real quick. We zoom in on the 5 minute, and I'll take you through the replay mode in a second. But once we started getting this, and keep in mind the fair value gap zone is over here. So we got the first wick, the second wick, and then the third one, these 3 drives down. And again, if you've gone through the training and if you've been practicing this, you will recognize that this is basically a potential Wyckoff here, a Wyckoff accumulation, with going into that fair value gap, going into that bullish RSI divergence. And you can see over here, once we started getting these wicks over here the third time, it means basically there's not much more downside pressure, and there's good potential for a setup of a long position over here with a stop just below those wicks, and actually just below the fair value gap. You can even do that with targeting the upside of, again, here's a fair value gap over here, a little bit of a gap. Here is a liquidity over here, which, as you can see, the end result is that it did get targeted. We got that big run up over here, and we actually got this move from here, from 19,300 all the way up to 19,800. And if you're taking a $100 stop, that's almost a 5x if you would have gotten that to the top there. But the target was, as you can see, 3.3. So let's run this back in replay mode, and let's see how we can do this in real time. Okay, so we got this move up, and you can already identify, even at this point, when this move is going up, yes, there's a fair value gap here. So we don't know at this point, is it going to just continue going higher and not come back there? But we identify this fair value gap here on the 1 hour chart. We mark it, we set an alert just above it, that in case we do get a retrace at any point in future, that we get alerted, and then we can zoom in on the lower time frames to see if it is indeed creating a trade setup that is worth taking. So let's just play it, see how it goes. You can see over here, actually, this was the first time we pulled back into it. We didn't go super deep into it, but if you would have set an alert just above it, you would have gotten alerted here, and it might actually have been possible already on the 5 minute and the 1 minute chart to be able to take a long position here with a tight stop or a stop below it, targeting potentially up here, because you can see also this is now a fair value gap over here, right? So you can see there was even already a trade setup potential there, just based on the strategy. Okay, so I clicked the wrong button, but we're pretty much back in the same place. So, okay, let's just see. You can see over here, even that trade here with a stop below there, targeting the top of the fair value gap, it would have gotten filled. But that is not the trade that we are after right now. So, just let it play out. We still have the alert here once again set just above the fair value gap. If it does come back there, that we can look on different time frames to see if it gives us a better entry. Okay, so we let this play out. We know at this point, it's just going to go a lot higher, and it's going to start coming down again. Okay, so now that it is coming down, obviously there's a bunch of other trade setups in between that you could follow, but you can see over here now we've got this fair value gap over here too. So really, if we wanted to, we could even set an alert over here. We should identify it right in this move. If the price pulls back, let's see what happens. So we'd set an alert over here, and we'd see if there's anything worth taking once it gets there. So let's just let it play out, and you can see over here we got that move into the fair value gap and a wick back up, right? So we could be looking again at a 5 minute chart or 1 minute chart at this point. When our alert got triggered, we got in there, and it could be possible here to again take a potential long setup if things are looking that way. We got the wick, so it is possible maybe that we get an entry over here with a stop below it, and maybe targeting the upside of the range. But again, that is just a potential setup. That is not the one we're after for this specific time. Okay, so we can see over here, same thing. It's just fair value gaps and supply and demand that's being filled. You can see over here, we had that little fair value gap over here. You can see on this candle. So from the move up here, it filled that, but we got this wick. So at this point, if you were watching this, even if you took a trade over here at this point, and we're targeting the upside, this wick, and especially if you zoom in on lower time frames, would have potentially warned you that, hey, this might not be done with more downside. We got this rejection here after filling this gap, and we might continue lower. So that might have been an invalidation if you were to have taken that trade to be able to get out, or to at least put the stop at break even or something like that. Okay, but again, that is not the trade that we're after. So you can see over here, I'm just trying to explain as the price action develops what to look out for. And this kind of thing is you want to look out for, because we got that fill into this fair value gap, a rejection over here. The trend is down, right? If you can actually see this over here, that's actually also just a support that is now flipped into resistance. It was the fair value gap. So all that together basically shows that, hey, we might actually be getting further downside continuation, and you might not want to long at this point, or even if you do, you want to make sure to stick to your risk reward of losing only a maximum of 1 R if you are invalidated. Okay, so anyway, the price action continues, and you can see now over here how this fair value gap, it was support, and then it flipped to resistance. You can see over here. So that's another sign over here with these wicks, these upside wicks over here, not being able to get back above this fair value gap, that we could be targeting this next one. So again, like I said, even on this entire way up, there are many trades to be taken. This was actually also one that I took, but I'm not going to break that down in this specific one. But this is basically a short position where you could have seen at this point, if we got this wick, you could have entered maybe about over here with a stop just above that fair value gap and above this wick, targeting potentially even this bottom over here, which is a 1 to 5, almost a 1 to 6 risk reward over here, which you can see as it continues to play out would have hit absolutely. So this is again just showing you how many trades there actually are, how it's possible to take these trades even on a 5-minute basis and get that same risk reward unit. You don't have to trade and make thousands of dollars on a Bitcoin position. You don't need to ride Bitcoin from 20,000 to 25,000 or 20 to 30,000 to be able to make good profits with trading. You can actually make incredible returns in the same format, risk reward, of just 5-minute charts of a couple of $100. Because again, if you're risking 1 to 3 or 1 to 5, say you have a $10,000 account, meaning you're risking $100 to be able to make 500. I mean that adds up. Obviously, if you're trading with 100,000, you're risking $1,000. But if you're right, you can make almost $5,000 or $6,000 on that trade on a 5-minute chart. And as I've shown you, there in this whole move up, there have already been multiple trades. So you can literally make, obviously it depends on the bankroll size, but you can make many risk reward. You can make many rewards, many R multiples, just in a small time frame on a daily basis on a 5-minute chart. And obviously, depending on the size of your bankroll, that could be hundreds or maybe even thousands of dollars per day on these smaller trades. And when I first learned about this, it absolutely blew my mind, because a lot of people are talking about, oh, you have to buy Bitcoin and get these $5,000 moves or $10,000 moves to be able to make good profit. You absolutely don't. You can make insane profits on much smaller time frames by using leverage and by sticking to the system where you can risk 1 R and make 3 to 6 R over here. Okay, so that was just a bit of a tangent, but I wanted to break that down for you too. Okay, so let's just get rid of these real quick, because that was the setup. Get rid of this. So now we have been alerted and it has hit our fair value gap. Now at this point, what we want to do is we want to actually zoom in to a lower time frame. So at this point, we want to zoom in to the 5-minute chart over here to see what has been happening. And you can actually see I've already extended a little bit too far in the replay mode on the hourly. I would have zoomed in earlier as soon as the alert got hit, which would have been at this point. So at this point, we're basically already at the trade setup, because you can see it wicked into the fair value gap on the hourly. It bounced, it wicked again, and bounced again. So now we have these 2 wicks. We got a third one. So you could have actually potentially already entered here after this wick, because again, keep in mind, we do also have this bullish divergence on the hourly that we've spotted over there too. So that's all in confluence. So you could even have entered over here at this point with a stop below the fair value gap over there. So let's just put this was the original trade that I entered after the third one. But you can see again, even if you'd moved this over, even if you'd entered here, the stop would have still been valid. It's maybe a little bit tight. I could have moved it a little bit below the fair value gap, which actually would have been a bit of a better option. But you can see, what are we targeting over here? Well, at least this is a whole fair value gap over here that we want to fill. So we'd be targeting at least this level. But of course, there's also a lot of activity here, say support and resistance. And then you can see over here is even the supply over here, this level, that if we do get a move up, it is possible even to run into this level. So this is basically the trade. We enter it. We can even put a little stop a little bit lower, but in my case it was this. I put it just below these wicks, and let's see what happens. Let's play that out, and you can see that was basically the bottom entry. Pretty good. We'll see how it plays out. And you can see we get this consolidation here, we get this massive spike to the upside. Exactly, it obviously hit this lower target over here, which was a bit conservative, but you can see over here we hit this supply over here with that wick. And yeah, that's basically the thought process that went into the trade. So you can see the thought process that went into this. This was identified far in advance with the 1 hour fair value gap that we put here, the alert that we put over there. When the alert got hit, we zoomed into the 5 minute, the 1 minute chart. You can see over here also the confluence, the bullish RSI divergence. This is basically also Wyckoff. You can see with the 3 thrusts down and the bullish RSI divergence, a stop below the fair value gap and entry. And targeting, well, on the conservative side, 1 to 3 risk reward, which coincided basically with this level over here, but also this potential supply, which ended up getting hit. So again, this was a nicely thought out trade that was executed very well. And this gives you an example again of how you can just identify these trades ahead of time. Be patient. It doesn't matter if the price gets there or not. If it doesn't, well, then it's fine and you move on to the next time. This market just gives opportunities over and over and over again. I've broken this down for you, even in the hourly move over the last week, how many possible long and short positions there were with a 1 to 3 risk reward, with the reasoning behind that. And that is all that we're looking for, these setups of at least 1 to 3 risk reward. In the case of trading with leverage and higher leverage, 25 or 50x, the only way that I think is possible is to do it on these very low time frames, the 5 minute, the 1 minute, and by identifying potential zones for these entry points in advance. Say on the hourly chart or the 4 hourly chart, we identify the fair value gaps. We know that if it gets there, that's when we want to zoom in for precision for entries on the 5 minute and the 1 minute, because that way we can have very tight stops of $50 or $100, where if we're wrong, we're invalidated there, but we can take that leverage position because the upside is 3 or 5. And even at this point, what we can do is you don't need to take the entire profit. So imagine the setup is right, you entered, you don't need to get out with 100% of the position here. If you think on the higher time frames that we could potentially, you can see it's about 19,600. If you think we're going up to 23 or 25,000, what you can do is you can close 50 to 80% of the position here in profits. You have absolutely no risk. You can move your stop loss, you can leave it here if you want even, or you can move it to break even, have zero risk, and continue to hold part of that leverage long position way up. And then if you do get that right and the price goes up several $1,000s because you're trading on higher leverage, you have a higher size position, that small remaining whatever 20 to 50% of the original position can turn into a huge amount of money. Even if it's just 20% or 10% that you leave as a runner, if this continues a lot higher, it can get very, very interesting profit-wise. And that remaining 10 or 20%, if you do let it continue to run, again, there's zero risk to it. It could end up being much more profit than the original, 80% that you took profit off on the 3R. Because imagine this just keeps going, and you can see what happens if you move this up, right? You can see over here, it becomes a 14R, and that's only at 20,600. Imagine it continues to run to 23K or 26K. the reward would be huge, even on that 10 or 20% that you leave it running. So that's another possibility there. So I hope you enjoyed this trade setup, this breakdown, and the thought process that went into it. And I hope this clarifies a little bit for you how you can start doing this yourself. Again, I do highly recommend that you start practicing this before you risk any real money. You can see the thought process behind it. You can even use the replay function, even though that isn't as effective in my opinion as actually doing it in real time before it happens. But the replay function, especially when you just go to a random part in the chart and you look for these setups, can also be a very good way to teach yourself to find these setups. And then again, keep a journal of doing this. If you can do this 50 or 100 times, you record the process. If you end up being profitable, you write more than 50% of the time, finding these 1 to 3 risk reward setups, well, at that point, you know you have a proven system, you've built your confidence, you know what to look for, and you can start risking real money. Again, only money that you can afford to lose, because it is all at risk, and whatever money that you put into your trading account, especially when you're trading with leverage, whether it's $1,000 or $10,000 or $100,000, of course, make sure it is only money that you can afford to lose, and of that account balance, you only want to be risking 1% per trade. So, in the case here of this trade where you're doing a 1 to 3, well, if you have a $10,000 account, you are only risking $100. If you are wrong here, if you get stopped, you lose $100. If you're right, you make $300. If you have a $100,000 account, you're risking $1,000. So if you're wrong, you lose $1,000. If you're right, you can make $3,000 or more to the upside. And of course, then based on your account size and your risk 1%, your 1R, you can determine the size of the position based on the stop loss and the size of the 1R unit. And of course, this is explained in the position sizing lesson that I will link to below. If you haven't gone through that and you need help finding position sizing, click on that and have a watch there. So I hope you found this very educational, very valuable and insightful, and that it gives you a completely different perspective of how you can structure your trades, the thought process that goes into them, how you can actually have a repeatable, predictable system with risk management, finding 1 to 3 or better risk reward trade setups, and how you can just patiently wait for those setups to come to you, because they happen over and over and over again. And for me, this has completely shifted my perspective and also the performance of my trading in a massive way, where you go from not understanding these markets or reacting to markets to actually predicting them well in advance, looking for the setups. And of course, you're not going to be right 100% of the time. You will always have losing trades, but when you're wrong, you only lose 1 unit. When you're right, you make 3 units or more, a unit being 1% of your bankroll, and that compounds and grows very rapidly. So if you do want to continue learning from me, if you found this valuable, please go and try it on your own. I mean, I shared this all with you absolutely for free here on the channel, but if you want to continue learning more from me, the technical analysis and trading course inside the Intelligent Cryptocurrency VIP membership is very detailed, more than 30 lessons. You can become a member down below, first link in the description. Sign up and get access to that. And if you enjoyed this video and you found it educational, please do smash the like button. It helps the video for the algorithm get out to more people. Subscribe to the channel if you haven't done so, it's completely free. And I would love to hear your thoughts. Leave a comment down below. What do you think of this method, of this strategy? And if there's anyone that you want to share this with, friends or family on social media, that you think would benefit from that, please do that. I would really appreciate that, because the more people that see this, the more people that get to learn, and the more lives we can improve. So thank you for watching. Please like, subscribe, share. Hopefully I'll see you inside Intelligent Cryptocurrency VIP, and I will see you in the next video.